Welcome to Unlock Wealth and Abundance. For those who earn tips as part of their income, managing finances can be unique and challenging. In today's video, we'll share valuable financial tips tailored to individuals who receive tips at work. Whether you're in the service industry or work in a tip-dependent profession, these insights can help you make the most of your earnings. Let's dive into the world of financial wisdom. Start by tracking your tips. Keep a daily or weekly record to understand your earnings and identify patterns in your income. Importance of tracking tips. Keeping a detailed record allows you to be more aware of your financial situation. You can monitor how much you earn on a daily or weekly basis. Tracking tips aids in creating a realistic budget based on your actual earnings. It helps you allocate funds for expenses and savings more effectively. By maintaining a record, you can identify patterns or trends in your tips. For example, you might notice that weekends are busier, resulting in higher tips. Tracking tips allows you to set achievable financial goals. You can aim to increase your average daily or weekly tips over time. How to track your tips. Use a journal or spreadsheet. Keep a dedicated journal or use a spreadsheet on your computer or phone. Record the date, total earnings, and breakdown of tips received. Digital tools. Explore mobile apps designed for income tracking. Apps like Expense Tracker or Tip Tracker make it convenient to log your earnings. Categorize your tips. If applicable, categorize tips based on different sources or events. This helps you understand which situations are more lucrative. Regular review. Set aside time weekly to review your tip tracking records. Analyze trends, identify areas for improvement, and adjust your approach accordingly. By consistently tracking your tips, you gain valuable insights into your income patterns, allowing for better financial planning and goal setting. Set clear financial goals. Whether it's saving for a specific purchase, building an emergency fund, or paying off debt, having goals will help you stay focused. Importance of setting clear financial goals. Clear financial goals provide a roadmap for your financial journey. They give you a sense of purpose and motivation to manage your money effectively. Goals act as a guide for creating a budget tailored to your financial aspirations. They help allocate funds strategically toward achieving specific objectives. Having well-defined goals allows you to prioritize your spending and savings. You can determine which goals are most urgent and allocate resources accordingly. Clear goals are measurable, enabling you to track your progress over time. Milestones and achievements become benchmarks for your financial success. Examples of clear financial goals. Emergency fund, debt payment, savings for a purchase or investment goals. Clearly define each goal, including the amount, timeline, and purpose. Determine which goals are most important and align with your values. Assign specific amounts and timeframes to your goals for easy tracking. Regularly review your goals, adjust them as needed, and celebrate achievements. Setting clear financial goals empowers you to take control of your financial future and make informed decisions to achieve the life you desire. Create a budget that includes your tips as part of your income. Budgeting helps you manage your spending and allocate your earnings wisely. A budget provides a clear overview of your total income, including tips. It helps you understand your financial situation comprehensively. Budgeting allows you to manage and control your spending effectively. You can allocate funds based on priorities, preventing unnecessary expenses. By including tips in your budget, you can align your spending with your financial goals. It ensures that you allocate resources towards both necessities and aspirations. Budgeting helps in building and maintaining emergency funds. Including tips in your budget ensures that a portion of your variable income goes towards savings. Examples of creating a budget with tips. Income breakdown. Fixed income, salary or regular earnings. Variable income, tips, bonuses, or other irregular earnings. Expense categories, fixed expenses, rent or mortgage, utilities, subscriptions. Variable expenses, groceries, entertainment, dining out. Savings and goals, emergency fund, allocate a portion of tips to build an emergency fund. Specific goals, save for a vacation, pay off debt, or invest. Review monthly, adjust your budget monthly based on actual earnings and expenses. Allocate a percentage of tips to flexible spending categories. How to create a budget with tips. Record all income, include all sources of income, including tips, in your budget. Categorize expenses into fixed and variable categories. Assign specific amounts for each expense category, including savings, and always try to dedicate a portion of tips to build and maintain an emergency fund. Regularly review your budget, making adjustments based on your actual income and expenses. Creating a budget that incorporates tips empowers you to make informed financial decisions, achieve savings goals, and maintain control over your overall financial well-being. Save a portion of your tips and consider investing them for future growth. Diversify your investments to reduce risk and build long-term wealth. Importance of saving and investing wisely. Saving a portion of your tips provides a financial safety net for unexpected expenses. Investments offer the potential for growth and wealth accumulation over time. Investing helps combat the eroding effects of inflation on the purchasing power of your money. It ensures that your wealth has the potential to grow faster than the cost of living. Saving and investing contribute to achieving long-term financial goals. Whether it's homeownership, education, or retirement, smart financial planning is essential. Diversifying your investments helps spread risk and enhances the potential for returns. It safeguards your portfolio from the impact of a poor-performing asset class. Examples of saving and investing wisely. Emergency fund. Emergency fund. Save 3 to 6 months' worth of living expenses for emergencies. Allocate a portion of your tips directly into a high-yield savings account. Investment portfolio. Build a diversified investment portfolio for long-term growth. Allocate funds into a mix of stocks, bonds, and other investment vehicles. Retirement savings. Contribute regularly to a retirement account for financial security in later years. Invest in a 401k, IRA, or other retirement vehicles based on your risk tolerance. Education fund. Save for future education expenses for yourself or your children. Consider a 529 plan or other education-focused investment accounts. How to save and invest wisely. Define your short-term and long-term financial goals to guide your saving and investing strategy. Prioritize building an emergency fund before more aggressive investments. Spread your investments across different asset classes, stocks, bonds, real estate, for risk mitigation. Conduct thorough research or consult with a financial advisor to make informed investment decisions. Set up automatic transfers to your savings and investment accounts to ensure consistency. Periodically assess your investment portfolio, making adjustments as needed based on market conditions and personal goals. By saving and investing wisely, you not only secure your financial present but also lay the foundation for a prosperous future. Remember to tailor your strategy to your unique financial goals and risk tolerance. Pay taxes regularly. Ensure you pay taxes on your tip income. Keep accurate records and consult a tax professional if you're uncertain about your tax obligations. Importance of paying taxes regularly on tip income. Paying taxes on your tip income is a legal requirement. Compliance ensures you avoid penalties, fines, or legal consequences. Fulfilling your tax obligations showcases financial responsibility and contributes to the smooth functioning of public services. Timely payment of taxes helps you avoid interest charges and penalties, and late payments can result in additional financial burdens. Regular tax payments provide peace of mind, knowing that your financial affairs are in order and you're contributing to your community. How to pay taxes regularly on tip income. Keep detailed and accurate records of your tip income throughout the year. Maintain a log that includes the date, amount, and source of each tip. Include all tips received in your annual income tax return. Follow the tax laws and regulations in your jurisdiction. If you are uncertain about your tax obligations or need assistance, consult a tax professional. Tax professionals can provide guidance on deductions, credits, and compliance with tax laws. Be aware of potential tax deductions related to your work, such as work-related expenses. Keep receipts and documentation for possible deductions. And plan for your tax payments by setting aside a portion of your income regularly. This prevents financial strain when it's time to pay taxes. Ensure you file your income tax return by the designated deadline. Late filings may result in penalties, even if you don't owe additional taxes. Late payments can lead to penalties and interest charges, increasing your overall tax liability. Failure to pay taxes may result in legal consequences, including tax liens or legal action by tax authorities. Unsettled tax debts can negatively impact your credit score, affecting your financial standing. In some jurisdictions, failure to pay taxes may lead to the loss of certain government benefits. By paying taxes regularly on your tip income, you uphold your legal and financial responsibilities, contributing to the stability of your financial situation and avoiding potential consequences. Always seek professional advice if you have uncertainties about your tax obligations. If you have debt, prioritize repayment. Focus on high-interest debts first and work on becoming debt-free as soon as possible. Importance of prioritizing debt repayment. Reducing and eliminating debt brings you closer to financial freedom. It allows you to allocate more income towards savings and investments. Focusing on high-interest debts first helps you save money in interest payments over time. Paying off high-interest debts sooner reduces the overall cost of borrowing. Timely debt repayment positively impacts your credit score. A higher credit score opens doors to better interest rates on future loans and financial opportunities. Reducing debt burdens reduces financial stress and improves overall well-being. It allows you to focus on building wealth rather than managing debt. How to prioritize debt repayment. Make a comprehensive list of all your debts, including credit cards, loans, and outstanding balances. Include the total amount owed and the interest rates for each debt. Prioritize debts with higher interest rates, as they cost more over time. Targeting high-interest debts first accelerates overall debt reduction. Develop a realistic repayment plan based on your monthly budget. Allocate a portion of your income specifically for debt repayment. Choose a debt repayment strategy that suits your preferences. The snowball method focuses on paying off smaller debts first, while the avalanche method targets debts with the highest interest rates. While repaying existing debt, avoid accumulating new debt. Cut unnecessary expenses and redirect funds towards debt repayment. Explore opportunities to negotiate lower interest rates with creditors. A lower interest rate reduces the overall cost of repayment. Celebrate each debt payoff milestone to stay motivated. Use positive reinforcement to sustain your commitment to debt repayment. Potential challenges and solutions. Emergency fund. Establish or maintain a small emergency fund to avoid relying on credit in emergencies. This prevents the need to accumulate more debt during unexpected situations. Seek professional advice. If managing multiple debts becomes challenging, consider seeking advice from a financial counselor. They can provide guidance on debt consolidation or negotiation. Stay disciplined. Discipline is key to successful debt repayment. Stick to your repayment plan, even when faced with financial challenges. Prioritizing debt repayment is a proactive step towards achieving financial well-being. By focusing on high-interest debts and developing a strategic repayment plan, you can work towards becoming debt-free and building a more secure financial future. Create an emergency fund to cover unexpected expenses. Aim to save at least 3 to 6 months' worth of living expenses. An emergency fund provides a financial cushion, offering security during unforeseen circumstances like medical emergencies, car repairs, or job loss. Having a dedicated fund for emergencies reduces financial stress and allows you to navigate unexpected situations with greater ease. An emergency fund helps prevent the need to rely on credit cards or loans during emergencies, avoiding additional debt. With an emergency fund, you have the flexibility to make thoughtful financial decisions rather than reacting hastily to unexpected events. How to build an emergency fund. Set a goal. Aim to save at least 3 to 6 months' worth of living expenses. Adjust the target based on your individual circumstances and comfort level. Begin by setting aside a small portion of your income regularly. Even a modest contribution adds up over time. Set up automatic transfers to your emergency fund to ensure consistency. This minimizes the risk of forgetting to save each month. Identify non-essential expenses that can be reduced or eliminated to redirect funds towards your emergency fund. Allocate unexpected windfalls, such as tax refunds or work bonuses, to your emergency fund. This accelerates your savings without impacting your regular budget. Keep your emergency fund in a separate account from your regular spending to avoid accidental usage. Consider a high-yield savings account for better returns. Consistency is key to building a substantial emergency fund. Stick to your savings plan, even during months with additional financial challenges. Periodically reassess your financial situation and adjust your emergency fund target if needed. As your income or expenses change, adapt your savings goals accordingly. How to use your emergency fund. Reserve your emergency fund for genuine emergencies, such as medical expenses, car repairs, or unexpected job loss. Avoid impulse use. Refrain from using the fund for non-urgent or discretionary expenses. Maintain discipline to preserve the fund for its intended purpose. If you need to use your emergency fund, make it a priority to replenish it as soon as possible. Resume regular contributions to rebuild the fund. Periodically review and update your emergency fund based on changes in living expenses or income. Ensure it remains aligned with your financial needs. Building and maintaining an emergency fund is a proactive step towards financial resilience. By following a structured savings plan and exercising discipline, you can create a financial safety net that provides peace of mind during unexpected circumstances. If you receive cash tips, deposit them into your bank account regularly to keep track of your earnings and prevent losses. Depositing cash tips into your bank account provides a clear record of your total earnings. It enhances financial visibility and helps you track your income accurately. Regular deposits allow you to incorporate cash tips into your overall budget. It aids in effective financial planning and ensures you allocate funds appropriately. Keeping large amounts of cash poses a risk of loss or theft. Depositing cash promptly minimizes the risk and enhances security. Depositing cash into your bank account contributes to building a positive credit history. It may be useful for future financial endeavors, such as loan applications. How to manage your cash tips effectively. Establish a routine for depositing cash tips into your bank account. Consider a weekly or bi-weekly schedule to maintain consistency. Consider having a separate bank account specifically for your cash tips. This makes it easier to distinguish between your regular income and tips. Keep a record of each cash deposit in a dedicated ledger or financial tracking tool. Note the date, amount, and source of the tips for accurate record keeping. Utilize mobile banking apps. Many banks offer mobile banking apps that allow you to deposit cash through mobile check deposit. Take advantage of these convenient tools for quick deposits. Consider automatic transfers. Set up automatic transfers from your cash tips account to your main account. This ensures a portion of your tips is readily available for daily expenses. Monitor account activity. Regularly monitor your bank account activity to identify any discrepancies or unauthorized transactions. Promptly address any issues with your bank. Be mindful of fees. Check your bank's policies regarding cash deposits and any associated fees. Optimize your deposit strategy to minimize fees. Educate yourself on tax implications. Understand the tax implications of your cash tips. Keep accurate records for tax reporting purposes. If you have limited access to traditional banking, explore alternatives like online banking or prepaid cards. Choose options that align with your needs and provide secure access to your funds. If your tips vary greatly from week to week, adapt your deposit schedule to accommodate the fluctuations. Ensure you are consistently setting aside a portion for savings or future needs. Use secure methods for depositing cash, such as ATMs located in well-lit areas. Avoid carrying large amounts of cash for extended periods. Effectively managing your cash tips contributes to financial organization and security. By incorporating these practices into your routine, you can keep track of your earnings, prevent losses, and maintain a clear financial record. If you're uncertain about managing your tip income, consider seeking financial guidance from a professional or attending financial literacy classes. In conclusion, managing tip income effectively is essential for financial stability. By following these financial tips, you can make the most of your earnings and work toward your financial goals with confidence. If you found this video informative, please give it a thumbs up, subscribe to our channel, and share it with your coworkers and friends who receive tips at work. Thanks for watching, and we'll see you in the next video.